When we look at U.S. corn ending stocks, we're very similar to year-ago levels right now. This is based on USDA data, not my estimates. Very similar, near 30-year highs, and the price is tweaked a little bit lower. And of course, USDA was tweaking things a little bit lower here today as well. On the demand side, and we've talked about this before, you notice this kind of parabolic curve here in Chinese demand. And each year, USDA projects, puts the new bar in for the new marketing year, and it falls short of that line. And then by the end of the marketing year, like this year, they raise it up and it comes up to that line. Only 2 times it hasn't here, and that's in 2003, 2004, and 2007, 2008. Some of that was due to some livestock production, particularly pork disease problems within China that reduced demand. Some of it was due to some production problems that just simply cut the supply. So we're anticipating that in 17, 18, we're going to see that gap closed as well. Here we look locally at U.S. exports, and you can see what the tendency is for USDA's export target. And basically, when we're above this zero axis, that means that final exports tend to come in above USDA's July estimate. And the average is about 88 million bushels over the life of this chart here, which is a little over 20 years. When we look at ending stocks, everything below this axis means that final ending stocks tend to come in below USDA's July ending stocks estimate by about 90 million bushels. And so if we were to follow that average, that would suggest then that we would end up with, 370 million bushels. That's adequate. That's adequate. There's no reason to ration demand with it, but it certainly wouldn't be as bearish. So the question is, what's going to happen?